Well, first of all, again, saying thanks for coming. And I've spoken to a couple of fairly knowledgeable people on the company. But I understand there's a lot of you that probably never heard of us before. So little overview of the business here. 2024 results came out a couple of months ago. So good solid set of financial results. $101 million of EBITDA, a margin of 47%, which for a mining company is relatively high. And we'll talk about why in a second. Great cash position, balance sheets debt-free, $67.6 million of cash, and generated just under $66 million of free cash flow last year. Now, that free cash flow number is important to investors because that's the basis upon which we calculate our dividend. We have a dividend policy that pays out 30 to 50% of our free cash flow every year. Full year dividend of 18p. We announced 9p in September and then another 9p in March. So 18p. Share price slightly disappointed in today. So the yield's looking pretty healthy, but probably better than putting your money in the bank right now. But I think that 18p actually represents 63% of our free cash flow. So we have paid slightly over the odds, over the policy for our free cash flow. So what's underpinning that dividend? We've got two production assets, one called Kounrad. It's a copper production asset in Kazakhstan. We produced a shade under 13,500 tons of copper. EBITDA margins there, super high, 73%. And I'll explain why when we get to that specific slide. Second, that little asset in Macedonia, lead zinc mine, lead production of just under 27,000 tons, zinc production about 18,500 tons. Margin a little bit more modest at 35%, but for a lead zinc mine and an underground mine, still a healthy profit margin there. If we looked at this as if we were purely a copper business, we'd be producing around about 27,000 tons of copper every year if we converted all the lead and zinc into copper. Safety is obviously a key for us. We unfortunately had two what we call lost time injuries last year. These were fortunately for us very minor. We do strive for a zero harm policy, and our lost time injury frequency rate, which is the number of injuries per million man hours worked, is very respectable at below 1. So safe tons, as the guys say on the ground. It's the only thing that really keeps me up at night is making sure everyone gets home safely every day. So as I said, we've got our two operating assets, Sasa and Kounrad. We own both of them 100%. They're really the engine room of the business, producing that cash flow I was talking about earlier. Sasa, we've got a life of mine out to 2039 based on the reserves and resources we have there. And Kounrad, the license actually expires in 2034, but we are looking at options to extend that. And then we've got some longer term growth prospects within the business as well. Aberdeen Minerals, quite close to home up in Scotland, up in Aberdeenshire. We own currently 28.5% of that with an option to go to 37% if we like what we see with the future drilling programs that they're undertaking this summer. And then another little business we set up last year called CAML X. We own 80% of that alongside a bunch of really seasoned explorers in Kazakhstan. So as I said, I'll explain why Kounrad is a low-cost operation. Our Kounrad plant sits up here. And this is a satellite image. To give a sense of scale, that open pit, which was mined between 1938 and 1996, is 2 kilometers north to south. There used to be a twin-track railway link going right into the bottom of it. So it's an enormous, enormous operation, or at least it was. And in the course of that operation, it dumped about 600 million tons of waste on surface. So this is unprocessed rock, and that's what we're going after. And we do this in situ. So we actually lay out irrigation pipe on all of these dumps, irrigate it with what we call raffinate, which is a dilute sulfuric acid solution. And that percolates through these dumps, dissolves the copper into a solution, which we then collect and pipe to the plant and produce copper cathodes. So unlike any other operation in the world, there's no mining, there's no rehandling of materials, no crushing, grinding, and consequently very, very low cost with that 70-something% EBITDA margin that we enjoy at that project. It's based in central Kazakhstan, it's almost right in the middle of the country, so about 8-9 hour drive to get to from any major center, but the infrastructure is really good, lots of power, lots of water, so no issues with getting any of the key reagents in either on that front. You can see the production. We've been in production there for 13 years now. Started off in 2012, got to nameplate of about 10,000 tons, and then actually did an expansion to get to a 15,000 ton nameplate there. And we've been producing between 13,000 and 14,000 tons of copper cathode ever since. We're guiding 13,000 to 14,000 tons again this year. What you can see on this slide is that we've actually outperformed since we started operating there. So the dotted line is what we call a theoretical leach curve. That's what the metallurgists put together based on all their test work on this material. And the solid line is the actual recovery that we've enjoyed you can see that we've gone above that leach curve. What that means is we've got more copper out quicker. It will ultimately tail off. I was saying to one of your sort of audience members earlier that we can't fight against physics and chemistry. So we will see this production decline slightly as we get towards the more mature years of this. The big trick we have here is we're trying to balance the new blocks that we bring on with the old blocks that are dying slowly to try and get an average grade going through the plant, 2 grams per litre. So that sort of gives us that consistent production profile you've seen there. And this is there's a lot of work goes into it. It looks fairly simple from the surface, but the guys are constantly fine-tuning this operation. As I said, it's outperformed. What that outperformance means is that we're probably going to see a little bit of life beyond 2034. We've got 85,000 tonnes that remain for us to recover, and that's on the original plan. That's on the dotted line. I'm hoping to be standing here in future telling you that that number is going to be a lot higher. Whoops. There we go. Now I've got it. There you go. So just run you through the P&L, well, what's actually the cost curve here. So as I said, C1 cash cost. C1 is a concept that the mining industry uses, and we also irritatingly report everything in dollars per pound rather than in dollars per ton, which we sell the material at. That's beside the point. C1 allows us to compare ourselves to all the other mines in the world, and at 80 cents a pound, we're right in the first quartile. We're probably one of the cheapest pure copper producers in the world. And that's a function of our power costs being super low. We pay around 6 cents per kilowatt hour. We've actually reduced that cost a little bit by bringing on a solar plant. And then, as I said earlier, there's no mining, no processing. I mean, no crushing and grinding, all that sort of thing. So we actually only spend just under $24 million a year producing that 13,500 tons of copper. So really low-cost producer. Kind of unique asset, really, in a way. We have some really good sustainability activities going on. I know they're probably not as popular as they used to be. I mentioned the solar power plant. That's generating 14% of our power requirements right now. Also, as I said, reducing the cost. We produce at around 2 cents a kilowatt hour out of that plant, maybe between 1 and 2. It does reduce our greenhouse gases sort of significantly there because all of the power in Kazakhstan is actually coal-fired. So we're trying to do our bit for the environment there. But we importantly spend around $3.2 million on local projects, just investing in the local community. These range from, as you can see at the bottom there, medical equipment through to educational donations, plus also putting in youth centres. We also have a few kind of shorter term things. We've restored some apartments following a fire, plus there was some flooding in country that we made a donation to the recovery efforts there as well. So very good corporate citizens and a popular company to work with in Kazakhstan. On to Sasa. Very different operation here. This is much more traditional underground mine where we mine underground, transport the ore to surface, crush, grind it, and float it to produce what we call a concentrate. That concentrate is then shipped off to smelters to be converted into lead and zinc and silver metal. Big news here really is that we've just completed our kind of 3 to 4 year capital program at Sasa. So Sasa is now set fair, effectively. This is now going to be a super stable operation going forward. We did have some dip in production through 2024, and that's sort of understandable, slightly disappointing. We went from 805,000 to 760,000 there. That's because the guys underground were implementing 2 new mining methods. We'd also built 2 new treatment plants and built a new tunnel, which we call the central decline, into the ore body. And that is basically it in terms of capital investment. That's just sustaining capex going forward on this. And what we're looking to see now is that solid line going back up towards that 800,000 tonne mark. As I said earlier, life of mine out to 2039, so really long-term asset here. Likelihood of this one is we'll extend beyond that life. It's very typical of small underground mines that there's additions to the resource and reserve base on an annual basis as you drill and explore the asset and the ore body itself. So it's slightly more expensive than Kounrad because we are actually mining, crushing and grinding materials, so the electricity consumption is much higher. That's always the biggest input in mines. We have seen inflation hitting Macedonia a little harder as well. It's closer to Europe. We've seen payroll go up quite a lot. Reagent costs, funny enough, copper is one of our reagents there. So copper price benefits us at Kounrad, but costs us a little bit here. But ultimately, still, as I said, a nice cash generative little asset that we've enjoyed ownership of for 7 years and will continue to enjoy that for many, many more years to come. Talked about those 3 projects. Nice shiny new paste backfill plant. This plant, what we do with this is we take tailings, mix it with cement, pump it back underground into the old mined out voids. It does a couple of things for us down there. It improves stability. It allows us to mine more selectively. So that's behind that extension of that mine life. We're now extracting that ore body on a much more selective and efficient basis. And it just makes the ground conditions a lot more stable, so a safer place to be underground. Plus, we're going to put around 30 to 40% of our tailings back underground here as well. Dry stack tailings, that puts tailings back on surface. What that does is a massive filter press, probably the size of this building. Takes all the moisture out, produces a 10% moisture material which we can stack on surface. So we're actually putting that onto old historical tailings, not increasing the size of the mine's footprint again. So again, from an environmental perspective, a very good thing to do. Plus also a lot cheaper than building another wet tailings plant, wet tailings dam at least, which I think the last count cost us $16 million. So CapEx savings plus the operational benefits there. And that's that tunnel I was talking about, central decline. That'll improve haulage efficiency by at least 30% and also allow us to run larger trucks up and down to the lower end of the ore body. So we currently have a fleet of 20-ton trucks. We've got a 33-ton truck making its way up and down there now with an option to go to 40 tons. So you can see the efficiencies that are going to go into that business going forward as well, just by that capital investment. So that capital investment's all done now. We get the guys are really proud of what they do. I get daily WhatsApps of all the stuff going on surface rather than underground. So that's all been good. Again, foundation activities in Sasa. Even in the 7 years we've owned it, just shy of $2.5 million spent just supporting the local community. Again, similar sort of things there. And we've actually got a new almost Dragon's Den style thing. We're trying to promote local entrepreneurs to start developing businesses in the area, just to ensure that the community, which is entirely dependent on the mine, will survive beyond the life of mine as well. I guess this is what you guys all came to hear. What do we do with all our money that we're generating out of this thing? So as I said, capital projects last year, we spent $6.5 million. We've got a few $1 million left this year on that dry stack landform. But most importantly, we're going to go back to the sustaining capex number. And whilst we're sort of saying 18 to 21, there's about 10 to 12 at Sasa, about probably 4 to 5 at Kounrad. It's unusual. Kounrad's usually $1 to $2 million, but there's a few sort of replacement of old cathodes there that we need to undertake, and that's a periodic thing. That'll revert back to the $1 to $2 million. So both assets are just going to be at that steady state sustaining capex going forward. Let's get to the exciting bit here. So what are we doing next? 2024, we looked at 37 new assets. So those 2 assets that I showed you, really good, really cash generative. What we're trying to do is add another asset to the portfolio that'll plug the gap between those, the sort of engine room, as I call it, with the cash generation, plus also those longer term opportunities. Signed a lot of NDAs, 6 site visits. We actually made a few offers last year. Disappointingly, didn't come away with anything from that, but it is a long, hard road. It is M&A. So what are we looking for? We want to stick to our knitting. We're going to carry on looking for these base metals. We do believe they're fundamental to society in the future. Copper, everyone knows about, with electrification. Lead and zinc. Lead is always going to have a role to play in electrification and energy storage. Zinc is just going to add to the life of steel. So a lot more demand for these things going forward. We've got considerable borrowing capacity. I said we had the clean balance sheet, so we can go out and buy things without diluting our shareholder base. Key to us is that it's got to be accretive to earnings. So if we are looking at things, the shareholders are forefront of our minds. So any deal that we do has got to be accretive to our current shareholder base. And where we're looking for these things currently in this time zone, plus Kazakhstan. We know Kazakhstan really well, so we do see opportunities there. But wouldn't stray outside of that jurisdiction into any other stands. And then the European time zone, which includes the Balkans and places like Turkey, selected countries in Africa, is really where we're looking. So copper, lead, zinc, this time zone, things that we can afford to build and we can afford to pay for without tapping the markets. Just to say a couple of words on this Arthur project in Scotland. We were drawn to it by our group geologist who'd worked for a company that owned a similar project in the US called Eagle, owned by Lundin Mining. He saw a distinct analog to that within what you saw at Arthrath. So we made that little investment, low risk entry point, £3 million, $3.8 million, with an option to increase that investment by another £2 million, should we like what we see out of the next drill program. So what we've seen so far has been quite encouraging. I don't think we got that picture today, but the core, you can see it on our website, full of mineralization. You can see the copper, you can see the nickel in there. So the case, so we're onto something. We've just got to find the sort of bulk it up and make it an economic deposit. So hopefully this year's drilling program will guide us a little bit more on that. And then in Kazakhstan, we have, 2024 was sort of just startup really for that. Only spent, $1.5 million. This year's our first field season. We've now got 4 licenses there, experienced group of explorers, looking for, again, copper, lead, zinc. Kazakhstan is known for these huge copper porphyries. You can see the size of that pit I showed you earlier. We see a lot of junior companies chasing down those. We can't afford to build those. Those are multi-billion-dollar projects. So we're looking at the distal geology to that, VMS, skarn, and epithermals. Those are much smaller. They'll probably be producing about 20,000 tons of copper if we can get one of those up and going. But but it's more importantly, we can afford to build it without too much stress. And last but not least, returns to our shareholders. So as I said earlier, 18p dividend final. That took the total that we've paid in dividends since IPO in 2010 to $380 million. So we've raised $214 million from the market in that same period. So you can see the just via dividends, that's far exceeds what we've ever raised. Policy stays the same. We've paid outside of that policy. We think that's the right thing to do at the moment in the absence of us doing any M&A. We do try and preserve capital to keep the business going, plus a little bit to effect some M&A. But anything over and above that, we think we're paying away to the shareholders to make sure that the returns are appropriate for what we're doing. And we can see there the if you bought shares back in 2010, you would have far outperformed both the FTSE 100 plus also the AIM. Things not so rosy at the moment, but still, I think we were talking to someone earlier, defensive stock given the low cost base in these turbulent times, and with that solid dividend that gets paid, you can see the institutional investors that we've attracted through just sort of prudent capital management, delivering on what we promise, and general good custodians of capital. So not much more time I've got, Mark, but I think I'll wrap up with this. Just really, 2025, as I said, keeping our production guidance as it was last year, looking to get Sasa back up to that 800,000 tons. We've delivered on all of those capital projects now, so very confident that we're going ahead without too many disruptions to those underground miners. And we'll continue to invest in the business, keep looking for some new assets, and continue with this, capital returns to our shareholders via that dividend stream. We remain debt-free. We've got a good cash balance. That's probably grown since the date of the last balance sheet. We've had decent commodity prices and not a lot of capex leaving the business, and that allows us to sort of really work hard on getting the next exciting phase going forward. So thanks for your time. I'll wrap it up there.
Thank you very much. Do I have any questions in the room? Yes. Just bring your microphone.
Thank you for the presentation. Very good. 2 questions, please. What stopped the mining in Kounrad? Were the Russians mining it before you got there? What stopped it?
Well, I think, look, as I said, it was a proper Soviet era mine, right? So operated at full chat from 38 to 96. Since then, I suppose Kazakhstan gained independence in 1991, and it's got really deep and just harder and more expensive. So I think it was just economics that really stopped it. And the grades are quite low, right? So the grade of the dumps, which are below cutoff grade, are 0.1%. And within that pit now, I think they've taken all of the juice out of it. So we do see the current owners scrabbling around in there every now and then, but what we understand they're doing is just blending feed into their plant, which sits about 20 kilometers to the south. So, and it's a centralized plant that brings in ore from all over the country, really. So I don't think it was anything other than sort of running out of ore, really, that stopped the mine.
Other question, please. How much silver are you extracting from the other mine?
It's one of my bugbears. So we take around, there's not a lot, so it's around 400,000 to 500,000 ounces a year. but unfortunately the people who owned it previously did what we call a stream on that silver. So we only benefit around $6 an ounce from that silver. The rest is they effectively, what they did is they bought the silver off of the previous owners. Those guys took the cash, invested some in the business, probably paid themselves a divvy and walked away with some money. But we sit with the burden of the silver already being sold. So it's frustrating. But it's become a very popular financing mechanism for small miners. It's not something we'd contemplate lightly, but because it's a perpetual instrument, really. So trying to get out of it is very difficult.
Thank you very much. Maybe just two more questions, if I may. So on M&A, you've mentioned you've been very active recently. And could you maybe specify the investment criteria in terms of like payback and also in terms of timing? I know it's hard to say, but is it like the matter of months, or could you be looking for like years? Like what's the kind of timeline on that?
We've been looking for years. And I think, we had probably a 2-year period before we landed Kounrad. I joined the business in middle of 2014, and it took us 3 years to get the Sasa deal consummated. We had the pandemic in the way. We had a bit of integration at Sasa to do, plus also these capital programs. But we've got a sort of fully fledged team just working on that 100% at the moment. I can't really talk about timing, but we are active. So, you've seen how many NDAs we signed last year. This year, we've got a similar number, coming through already. So we're actively reviewing assets, doing due diligence, and, hopefully we'll come up with, the goods at some point. So in terms of the criteria we use, we try and keep it fairly simple. So in order to really enhance value, what we're looking for is something that's going to produce around $50 million of EBITDA, at least, at a minimum. Because we've got 100 now, so adding 50% to the business with all the time and effort it takes is kind of what we want to do. So what that then means is you're going back to a sort of 20,000 ton of copper. In order to build something like that's probably going to cost you between $200 and $500 million. So you can start working out the payback periods from there. But in terms of the cost base, what we don't want to do is necessarily, we knew we were going to do it with Kounrad because that's a unique asset, but keeping that cost in the lower half of the curve is the key. And what that means is payback periods become sort of around 5 years and less on those sorts of assets.
Right. And maybe just one more on hedging. I think you used some hedging before and then you kind of didn't. Like, what's your view? I think you have also an offtake agreement. Does it help you with like maybe protect the prices or not really? Or you're taking the market price of copper?
No, so take the second half of your question first. So the offtake agreement is very simple. That's literally making sure that every ton of material that we produce is being sold. Right. So we don't run inventories. We don't, sort of run any of that sort of working capital risk. The hedging, we only did that because it was as a defensive mechanism. So that was in 2021, and what we needed to do then was to start those capital programs. We needed to ensure there was a minimum cash balance at the end of the year in order to finance those capital projects. The only other time we'd hedge was again to defend either capital project, a debt service, something like that, or defend a budget. We wouldn't use it as a speculative tool at all.
Thank you.
Yeah, I noticed some treasury stock. What's your buyback policy? And then I've got another question.
Well, we don't have a buyback policy. We've got a dividend policy of 30 to 50% of cash flow.
I saw treasury
shares.
Yeah,
those are just shares that have. So those are shares that I don't even know why they're sort of legacy.
Right. Okay.
So I probably should know. Apologise, but no.
On the copper license in 2034 expires.
Yes.
What happens after that? How easy or difficult is it to?
Well, in order to look, I mean, we'd be the natural people to extend it. So I think the state gives you first dibs on extending the license. Kazakhstan is still a very bureaucratic country. So there will be a study required to be presented to the authorities to justify the extension of the license. But one thing we're really good at there is understanding our way through all that bureaucracy. So that process is already underway, really, in order to try and look at that license extension.
And the license on the lead and zinc and the other in North Macedonia?
Yeah, that's a different sort of regime. So that license is sort of perpetual until you mined out, basically. So There's but slightly more complex than that. Again, each new mining area needs a little sub-permit, so there's constant dialogue with the permitting authorities anyway. So they're very aware of what our plans are over 12 months, 60 months, and longer term, so that we make sure that all of the licenses are always in place in order to operate.
And sorry, just to go back to the buying back the shares, that's not your policy. I mean, to support the share price. Because you've got plenty of cash.
It's something we do contemplate from time to time. All the analysis we've done, particularly at the sort of junior end of the market, shows that these buyback programs provide a short-term benefit, not the long-term benefit that we'd all like them to. Don't know why. Theoretically, they should work. And clearly, if you look at the larger cap end of the market, the evidence is that it does support share prices. It's the price. I think we were £1.50 or so today, £1.54. It's these sorts of prices that everyone's like, okay, let's have a look at the buyback again, and then by the time you've sort of contemplated and looked at the different ways of doing it, then prices back up to 170, 180, and you think, well, maybe it's less imperative to do it. So, but more, what we've again in the efforts of keeping things simple is that until we've done a deal, I think the way to return capital to our shareholders via that dividend policy. If you, for example, are buying back shares and then you're in a M&A situation where you possibly going to pay with your shares, you start creating all sorts of kind of weird little conflicts within the business. You also lose control of it under the MAR regulations as well. So if we, often given the BD activities, find ourselves as insiders, and we can then no longer control that buyback program. So it just goes into the hands of the brokers. So it's more complex than people sort of would think, but it is certainly one lever we think about pulling every now and then.
Are there any questions online? No. So coming back to share price, you talked about an outperformance since 2010, but the sort of recent performance seems to imply that the market is somewhat discounting your renewal and exploration activities. Do you expect is that your view? It's sort of behaving as if this is a diminishing resource over time?
Well, I think that last part is true. I think I think all miners do have that issue to face, and I think we've got two assets that, as I said earlier, are fully invested. Kounrad is definitely it's a finite resource. It's all sitting on the surface. You can see what it is. Whereas at Sasa, at least we've got drill rigs running underground, and there's the ability to add to that resource inventory. So I think from the market perspective, there's certainly that is perceived as a risk. The other risk people look at is like we've been talking about doing M&A for so long now, and people are wondering what that deal's going to be. So I think and I've spoken to potential shareholders who are sitting on the sidelines waiting to see what it is, and I'd love to say next week, like, ta-da, here we go. But what I can say is that everything we look at is well, it sounds obvious, but it's going to be accretive to the share price, right? Because otherwise we wouldn't bother. But at that point, when we do finally get that confluence of events that goes, okay, well, there's no fatal flaws in DD. You can agree a price with a management team that is reasonable, and it's in the deal is much more executable. Then we're going to do it. So, and of course, the parameters that we were talking about earlier stack up. Yeah.
And those acquisitions that you're looking at are in the exploration end, or are they in because you seem to be you're spanning exploration and and tailings.
Look, I mean, I think what we're trying to do ultimately is create a portfolio of assets within the business that has a pipeline. So you'll have this conveyor belt from that earlier stage, which is currently CAML X and Aberdeen. You've got the production, and then a couple of points in between where you've got various stages of levels of engineering. Maybe what we call a pre-feasibility study up to a definitive feasibility study. So things that are, nearer term cash flow, certainly than CAML X and Aberdeen, but, are going to provide that sort of optionality within the business there. We're driving them on the value curve, and we can do that a lot more efficiently than most companies. Not most, sorry, but most companies in our sort of situation because of the balance sheet and because of access to capital. So, we don't have to, like a lot of junior companies, get to each sort of milestone within a project development and then go back to the market and tap it for more money and then spend that money. So the CEO then spends, half his life on the road trying to raise capital rather than actually putting it into the ground and making sure that, putting his time into delivering on all these projects. So that's what we're aiming to do ultimately. What we've got around now is that gap in between those two assets, but never say never. I mean, I think we're probably unlikely to put any more sort of earlier stage exploration into the portfolio. Would we put another operating asset into the portfolio? Yes, absolutely, if we get it at the right price.
Right price and presumably right geography. Because
Correct, yeah.
And you mentioned first quartile for Kounrad, but I don't think you mentioned for Sasa.
Didn't for Sasa. Sasa, we sit just basically on the median almost, really, of the cost curve. So, the zinc market's a little bit more volatile. So what we do see in low zinc price environments is a few assets do end up getting, it does get into the cost curve. We see some shutdowns, but zinc price has actually been fairly robust over the last few years, so we have enjoyed that. But it's, as I said earlier, what we've been hit with there a little bit more is that kind of more Europe-wide inflation, particularly on energy costs. Yeah.
Okay, and I think that sort of feeds back into the question on hedging, that if you're first quartile, it's unusual to be hedging first quartile assets. Yes. Any further questions? No? In that case, have you got anything online? No. Then I'm going to say thank you very much indeed, Gavin. That was very, very, very interesting.
Yeah. Well, thanks for the opportunity.